AMD dropped 16% after earnings. It looks like the AI story is breaking. I don't think it is. I see a mispricing with a path to $320 by 2026. If AI and the OpenAI deal plays out well, in minutes, I'll break down the sell-off and my 2026 scenarios so you can decide what to do with AMD. Very nice scenarios. Let's look at why the stock actually tanked. Wall Street wanted perfection, but AMD delivered $440 million inventory charge due to export controls and guided the Q1 revenue slightly below the $10 billion mark analysts wanted. The stock was priced for perfection, so when the whispers weren't met, the valuation contracted immediately. But this is short-term reset and not a broken business. Despite the noise, the core business actually accelerated. Total revenue growth has moved into the mid-30s range, while the market obsesses over a slight guidance miss. The ignoring the gap EPS jumped over 200%. The fundamentals growth engine is intact, and that dip in share price has effectively de-risked the stock for new investors who are waiting for a good pullback. NVIDIA dominates the AI infrastructure today. CUDA, the software stack, and the data center footprint gives them a real moat. The market is right to recognize that. But what's underappreciated is the value of a credible number two. AMD competes on price, offers a more open ecosystem, and benefits from hyperscalers that want to avoid a single vendor risk. And that is before factoring the OpenAI partnership, which would materially change AMD's growth trajectory. This is a multi-year AI infrastructure deal that makes OpenAI a flagship customer for AMD AI GPUs. Without OpenAI, AMD is a solid AI contender. With OpenAI, it earns a hyperscale validation, stronger revenue visibility, and real multiple expansion potentials, backing our $320 price target. This layers onto a data center business already growing 40% year over year. Data centers where the real AI money is. AMD's DC revenue is up roughly 39% year over year. What's changed isn't just the level, it's the mix. AI GPUs are now a much bigger chunk of that revenue, and that mix keeps shifting towards AI workload. So when we talk about OpenAI or M1400, it's all about plugging into the same accelerating data center engine. One of the biggest bear arguments is software CUDA. The narrative is that it's an unbeatable moat, so AMD can win in AI. Yes, CUDA is dominant, but ROCm adoption is quietly improving. More frameworks work natively. Downloads are rising and hyperscalers are deploying AMD in production. The real question isn't whether AMD beats CUDA, it's how much share it needs to justify the $320 stock by 2026. For $320 by 2026, three things have to go right. M1400 must ship as a credible NVIDIA alternative. ROCm has to support a major AI workloads at scale. And AMD needs to turn that into a sustained data center ramp. If those align, the $320 looks achievable and not aggressive. By 2026, I see three parts: the bear, the base, and the bull. In the bear case, AI disappoints and the stock falls below $150. In the base case, solid AI execution supports $240 to $260 range. The bull case, strong M1400 adoption and real ROCm progress gets you $320 plus and positioned for a base with upside optionality. Looking to 2026, I see a base case and a bull case, both driven by AI revenues and earning powers. In the base case, AMD executes on a solid AI ramp. Revenue grows, margins expand, supporting roughly $240 to $260. In the bull case, stronger M1400, ROCm, and data center adoption accelerates EPS, making $320 plus realistic. Before trading $320 at a destiny, you had a real risk. First, execution. If M1400 slips or ROCm under-delivers, AMD captures less AI spend. Second, demand. AI data center growth could slow or stay concentrated. Third, valuation. Even solid execution can't fight a second D rate. If those show up, I scale back, not hope. So how does this translate into positioning? AMD is a high conviction AI infrastructure play, not a replacement for a broad index. I see it meaningfully, but not as a dominant position, respecting execution, demand, and valuation risk. My time frame is 2 to 3 years. I'm positioned for the base case, with upside if the bulls play out, without letting a bear case damage the portfolio.